again. Yeah. So today we continue our discussions on financial management, etc., around building our 3 to 5 years financial projections for our businesses. And well done on scaling. Almost everyone here scaled through the business model Canva for last week. So well done, everyone. Well done. Okay, so we have a very important guest in our list, who is going to be taking us on topic around our financial management and how we look at our audits. Like I explained the last meeting on Monday, we need to look at our financials from a different perspective. So we have Mrs. Agbeke Oguleye in the house. Please help me welcome her with a clap of hands or anything you can do. Just say hail her, tell her welcome. She's a
welcome.
Please let her feel the welcome, please. I'm going to
welcome.
Yeah, can everyone see my screen? Thank you. So please let her feel comfortable.
Welcome, ma.
Welcome, ma'am.
We will need her a lot to help us in this journey. So I'll read Mrs. Agbeke Oguleye's profile, and then I'll allow her to take the floor. Right. Mrs. Agbeke Oguleye is the CEO, Wells Accounting and Tax Services. She is a chartered accountant, ACCS, CITN, and that's also chartered tax manager. So a seasoned accountant and business consultant with over 15 years of experience, spanning multiple sectors, including manufacturing, education, consulting, travel, non-profit marketing, startups, and retail pharmacy. She holds a degree in accounting from Manchester University and a master's in global business analysis. As the CEO of Wells Accounting and Tax Services, Agbeke leads a firm dedicated to supporting businesses, especially startups, through bookkeeping, payroll services, tax advisory, and business consultancy. Her passion lies in equipping business owners with the financial tools and insights they need to make informed decisions and drive sustainable growth. A highly analytical and forward-thinking professional, Agbeke specializes in budgeting and forecasting, cash management, bookkeeping, tax planning, financial planning, business analysis, and re-engineering, and project and crisis management. Her expertise in financial management enables her to guide entrepreneurs in structuring their businesses for efficiency, compliance, and long-term success. In this session with DealWoman, Agbeke will provide practical insights on financial management, bookkeeping, and auditing, key pillars for business stability and growth. With her wealth of experience, she is committed to helping business women understand the importance of financial discipline and strategic planning to scale their enterprises effectively. Ladies and gentlemen, join me as I ask Mrs. Agbeke Oguleye, CEO, Wells Accounting and Tax Services, to take the floor. Thank you, madam. Thank you so much.
Thank you, Ma. Thank you for having me. I'm so happy to be here. I'm sorry I'm joining on 2 screens. For some reason, my laptop seems to not want to show the video. So if you see my face turning the other way, it's me looking at my slides. But if I'm straight, it's using my phone. It's a privilege to be here. I love working with women. I'm a woman myself, and I'm an accountant. When Miss Comfort reached out to me that there was an opportunity for women with support in finance came, I was really excited because My background is accounting, and I have a passion for assisting people to understand the numbers and make sure that these numbers are working for them and they're getting the fruit of their labor. You know, women, they say if you give a woman 100 naira, she can make 1,000 naira out of it. But when you've made that 1,000 naira, how can you be sure that it's 1,000? How can you make sure that the 1,000 goes to several other things that could make it bigger? And how can you do that in a good time and with a good condition? So without much ado, today I'm here to discuss financial management with you. I'm happy again, like I said, to be in the room. Please, if you have any questions, I would like it to be as interactive as possible. You can put your hand up, but my screen will be showing. So if your hand is up, you can let me know that your hand is up, or maybe we'll wait till the end, whichever works. But from time to time, I will pause to ask if there are any questions. So I'm just going to share my slide now. I will start from there. Thank you. Please, can you enable me to share my slides? Thank you. Please confirm you can see my screen.
Yes, we can, ma'am.
Thank you so much, Ms. Rebecca. Okay, so like I said, a brief introduction. Today, I'll be taking you through, this is the content of our conversation today. We'll talk about, I've introduced myself, and thank you, Ms. Comfort, for the introduction. I'll tell you a bit about our company, and then we'll go into the financial management, bookkeeping, budgeting, audit, and how it can benefit you and how we can help you as well. So financial management is the topic before us today, record keeping and bookkeeping. You know, these names are really just a name to show that may be large, but all we're trying to say is how do you keep your records? How do you know what you have? And how do you use it to the best intent, for the best intent, so you can get your best returns? I already spoke about Wells Accounting and Tax. Well, so that is our name. That's the company I work with. We are based in Nigeria. We do a lot of work across accounting, taxation, and even HR. And we were reached out to we have been contacted by DealWoman, and we're really happy to have this opportunity to assist ladies and women in businesses in Nigeria. So into financial management now. So financial management is just an opportunity for you to manage your money. When you do all the businesses you do, you have to make purchases. Those purchases will be plowed into the type of business you do, and you would have returns at the end of each day, each week, each month, and each year. How do we record and monitor all of these payments going out and the monies coming in? That really is the conversation we're having today. I hear people say a lot of times, I really made money this year, but I'm not sure where it has gone to, or I'm not even sure if I'm making money. I'm just doing this thing day by day. And I think it's cheating ourselves if we're putting so much energy into what we're doing and we're unsure, or we're not making the best of the situation we're in. So financial management is a big term, but all it's just saying is, how are you managing your money? And it doesn't have to be anything complicated. It starts with a pen and a paper or a phone or any form of monitoring. These are the amounts I've spent today, and this is the monies that have also come in. So if I put it very plainly, the monies that come in, we call inflow. The monies that go out are outflow or expenses. So all your inflow need to be monitored, and all your outflow also need to be monitored. And the end game is that the inflows overweigh the outflows, meaning we're making a profit. So that means when you receive all your monies and you pay for all the things that made you able to do the business, there should be surplus at the end. And that includes surplus to pay your staff, to pay rent, to replenish your inventory to use to make the business. For instance, let me take a bakery for an example. If we have a bakery or a baker in the house who does cakes, by the time they make cakes, they should be able to cover the cake, should be able to cover for everything that went into the cost of the cake. So the production, the flour, the staff, the chef, the generator, the location. And although you think, how can a 15,000 naira cake cover all of that? Each cake we bake has a portion it has to cover and needs to also be costed well, which is a totally different topic, to make sure that we need to do a minimum of these amounts of cakes per time so that we can keep our lights on, or so that we can remain competitive, or so that we can keep doing business and grow. And apart from even the strategic planning and covering costs, we also need costs to train, because as a baker, I would have to learn and go to school or be informed so that I can keep up and be cutting edge and not just be baking cakes with all these hard icings I used to eat when I was growing up. People are doing all sorts of fancy cakes nowadays. So that is just an example to show you the different thoughts and mechanisms that go into the word financial management. So it's how you manage your money that it helps you do so many other things and moves your business into different levels. Even things like moving it from one generation to another. You have opportunities to move your business after all years of hard work, depending on the stage you're in, to transition it to your children or to another level to different people. So that's really the strategic planning in a nutshell. And then we have things like market navigation to help you navigate the unique market. So do you want to, in the same example of cakes, do you want to just start doing wedding cakes only, or birthday cakes, or animation cakes, or the cakes they do now that you're not sure if it's a real thing or not? So that is just another example. And then you also have things like transparency, which is part of the reasons you're in this group. Because when anyone needs to look at your company as an outsider, as a stakeholder, they need to be able to see what the business is doing, the capacity and the capability of the company. So the management accounts or the audited accounts or any form of financial information gives us an insight to what you're doing. From it, we can see, oh, this deal room bakers, for example, were able to make 12 million in 2024. And of that 12 million, they only bought 2 million worth of flour and they paid all their staff. And at the end of it, and after they've paid all their taxes, paid everything they have, they still have 5 million left. That kind of information is showing an investor that this company is worth putting money in. This company has enough, and if we invest another 10 million or even 100 billion into them, they have almost 40% that they can give us and we can share. And so all of that kind of information is exciting. And when they say transparency, it's showing them that the business has potential. It's showing them that with the right planning, we can even do so much more. So that is what we mean by transparency. And you can even go international. With the way information is provided now in the accounting sector, everybody in the world can take your company's accounts, look at it, and understand what you're doing. And you yourself owe it to yourself to understand how well your company is doing. So in the order of who needs it first, it's the owners of the business. The owners of the business need to know that every day when they wake up and run around and retire at the end of the day, at the end of the year, the business is working well, it is worthwhile, and it is worth continuing, which we call a going concern. And then you think of other people that have pledged their time and their livelihoods to your business. You have your staff, family members who possibly may work for you or benefit from the business. And you have the investors who you may be looking to work with you. I'd let you know that no investor would invest in something that is negative or something that is not worth their while or something that doesn't have potential. And even the government, believe it or not, wants businesses to flourish, because when you flourish, they're able to make money off you in the name of taxes. So everybody is looking up to you. And then there's also obviously your landlord, there's the waste management, and the list is endless. So everybody wants you to win. So moving on to my next slide now. So when we talk about all these books, does anybody have any question till now? Okay. Can everybody hear me?
Yes, ma'am, we can hear
Yes,
you.
I can hear you. We
Yes,
can hear
ma'am.
you.
Okay, thank you very much. So moving on now to understanding bookkeeping. So bookkeeping is a nice word. It's a long word, but it doesn't mean anything beyond what it's saying. Bookkeeping. Even maybe my daughter, I tell them it's arranging things in the place it should be. So, you know, arrangements in the kitchen, you have where you have where you put your rice, you have your meal and meal. That's what keeping it in a very big way. And what I say, them in the right place, and them as well are indicators of what is happening in your business. So if I bring another example, let me think, okay, let's say I've used bakery. Let me see what other example I can use. Let's say, does anyone want to volunteer the type of company so that I'm relevant?
Yeah, I'm into skin and hair care products.
Excellent. So skin and hair care products. So if we're doing skin and hair care products, every month you buy different products, you buy shampoos, conditioners, you buy salt, all of these things are being purchased. So as you buy all of these things, you are keeping your receipts and trying to see how you're doing. So as a skin and hair care product person, let's go down the hair route, would look at all the people that have come to your salon to do different types of hair services. So maybe relaxing, braiding, cutting, and all of those. So we have all of those that will track, that you will track. So you won't just say, oh, money came in. At the end of the month, you can say, I had 14 people that did haircuts. I had 27 ladies that did relaxing. I had 500 people that did braid. Help you to see that if you're doing this well, you can put your more resources into braiding. So you would have maybe better braiders, more braiders, maybe not too many shampoos should be purchased if much people are just doing braids. Or perhaps you could purchase a lot to cover for before the braiding. But the numbers will help you in the bookkeeping, because we are giving you the info, you are saving the information in a way that the data is talking back to you. And then it will also help in your expenses, because then you won't spend too much money on scissors and clippers because you don't do too much cutting. And you may not even need to use your generator long because you're mainly braiding. So by the time you get to the end of the year, you can use your information from the bookkeeping that you've done to track how you're doing, to see how the business is doing, to manage how you spend money in the right way, and to also position your business to be cutting edge where you are doing the best. Because if you're having that many number of braiders or people coming in for braids, surely there should be something key about what you're doing. So that is the kind of thing bookkeeping helps with. So it gives us the information because we have put the data in. That is what bookkeeping is in a nutshell. So anybody can lift it up, and it has different levels. So internally, you have this information. You can the way the data is talking to you. And then obviously your investors may not see it in that level, but they will see that the numbers are doing well. Recording things where it matters. So when you buy fuel, we put all your fuel purchases in fuel, and month on month we can track. We can see that, oh, last month in January, we bought 50,000. This month we bought 80, and we remember that, oh, that's true. We had issues with lights, and so we've not had lights, and that's why we're using more generator. And in the month, we only use 10,000. Subsequently, we think, oh, that's true. We've had lights, so we've not used generator, and you're keeping the record. And there's also monitoring, because with bookkeeping comes monitoring. You're better able to spend and put resources where it matters. You will not just be sending someone to be buying 50K petrol regardless. It keeps your business in a place where you're able to monitor the limited resources and put the monies in other things that also help you grow. So that is the basis of bookkeeping. So when you have bookkeeping in a lockdown position, you're better able to track your cash flow. You understand the cash that is coming in and the one that is going out better, and monitor it. And when you have monitoring, you don't spend anyhow. You are better placed to invest even in your company. You can now purchase a different type of chairs for your salon. You can now get a bigger generator for your salon. You can now you can take over the next office because you're expanding, only because you're spending better and you're keeping a track of your money. That is what bookkeeping is saying. So with also bookkeeping comes the knowledge or better knowledge of your business. It also helps you with direction. Because like I said, now we see that we're better breeders. We can go and get better people to breed, and we keep increasing. And as we increase and we're doing better, somebody comes up and can also help us with marketing, and more people get to know about us. And with marketing too, that is an expense. You know, we can market ourselves, or however small, from Instagram to having other people, you know, so bookkeeping is the heart of any business. Like they say, accounting is the heart, which is what bookkeeping is. So I can't stop talking about this, you know, and it also helps you to manage the money of the company for the money. A lot of us SMEs find us, and SMEs we've worked with, find us using our personal money, company money for all sorts of reasons. Bookkeeping will help you monitor what has been spent for the company. So should you as a person be spending your private money to be buying shampoos and relaxer, the company owes it to you to give you back, because we are recording what has been spent in that month, in that period, in that year. And you can see exactly what your business is doing and how it is doing and what are the issues you have. You can see the times when you're overbuying or the times that things are quickly spoiling, and you can monitor them. You can also monitor usage. And when you monitor usage, it's hard for things to go in your store for people not to know. So all of this in a nutshell is just a financial eye on your, you now go and ask someone else to join you in your scaling journey. And then also I have something about tax compliance. If you're over 20, if you're under 25 million per annum in terms of your revenue, revenue is income for the year. You don't pay any taxes. Then that's income tax. If over 25 million and 50 million, if you make a profit, you don't pay taxes. Okay, so the government is interested in you doing a good job. So on another slide now, if you have any questions, like I said, please feel free to let me know, and I hope you're still hearing me. So it's not enough to have your bookkeeping done. You should have it done accurately and completely. So if it's not accurate, then it's not going to give you the information you want. And we all understand the importance of data. Data is what helps us to make informed decisions. So the better the data, the more complete the data, the more accurate the report we get. And the sources of data for accounting is usually your bank. So we always advise, please spend for your company's account. If we have women in this group that don't have a bank account yet, I beg you to consider doing that as soon as possible. A bank account gives clarity. It separates you from your business. It makes you look serious to investors. It makes you stand out. It makes you monitor what's happening, and it makes you be on a path of being a business owner and having structure. Having a bank account is the beginning, but it also should be it should lead you to rely on the company and not be spending your money for the company or vice versa, the company's money for you. Should you spend your money just because of access to cash at some certain times, you should be able to refund yourself from the company and vice versa. The aim of this is to make sure all the information we have is complete. All the information we have is complete. Complete information gives you an opportunity to see the financial health of your company. How well am I doing? Am I doing well? Compared to who? It helps you to be able to position yourself with similar people that are doing the same thing. And it makes you see whether you are profitable. Some businesses may not be profitable in the first 3 years. You have accurate record. Tax people, information you have. So when you've done your work and you have financials and you put it up, a lot of people are willing to take you seriously, have conversations with you. And even when it looks like things haven't started looking huge, when they see potential, they're willing to walk you in the journey and even provide training. And then there's also government compliance. It is best practice that you have complete financial information. And then we now talk about financial projections information. I've been mentioning bank statements. I've mentioned working with the information you have. I've told you about checking the data of what you have spent. All past tense. A projection is when doing 200,000 a month. I'd like to move to 400 in the next 6 months. What are the things I need to do to get there? That is a projection. So a projection is forward-looking. It's a forward-looking document that is trying to position yourself for certain financial outcomes and growth. You're looking at how can I grow this business to be at this place? And what are the things I'm supposed to do to get there? Earlier, I mentioned marketing. So still on this, our salon example, we can think of the marketing we can do. We can think of expansion. So if I want to double my income, perhaps my salon can really only take 4 people at a time. So if I have 4 people at a time every day of the week already, there is a what if I buy another store and I find another shop and another place that may give me the same thing? What if I get people that can do home service? What if I add nails so that even though they are sitting down and it's already packed, we can do their hands and nails? You see, so the list is endless of how we can consider projections. But projections is just really saying, what are the things I can do to make my business grow for the future? So projections are future looking. Financial projections, like I said, also projects, it projects you're looking at how to make your money coming in consistent and consistently growing. You can also project on your costs. How can I make sure I don't spend more than 50K a month on fuel? How can I make sure I don't spend more than 100K on shampoos and conditioners? How do I make sure that? So all of those are projections. Some things would still be factored into your projections because this is only us planning. They say at least 50% planning is better than no planning. A bad plan is even better than no plan. So we're saying 50,000 now because petrol prices are about 890 to 900. So we're working with today. So we'll work with the information we have and we'll build in some room for inflation. We'll build in room for things, that we cannot foresee while we are doing those projections. But in a ballpark, this is what it is. So if I'm projecting that I want to increase my sales, I want to get another store, I want to get a generator, I want to increase my staff, then I need to also find how I can match it with the revenue coming in, because that is how it works. And then that's how we can get the cash flow working properly. So decoding management accounts. Management accounts are typically the same thing as bookkeeping, but we call them management accounts because it's usually given to managers when it's provided or produced by an accountant. And they have different areas, they're an internal report. Okay, let me talk about them first. My slides here can show it all. They say it's an internal management accounts are internal financial reports. So when we produce it, we show it to management. That's why it's called management account. So it's an internal document because your accountant or auditor provided it to you. And so you can now use it to do the analytics we've been talking about. And then they can talk to you about the position of your company, where your company is headed, what it looks like, the health of the company, what you should look out for, risk areas, whether it's going up or where the company is at the particular time. So in order to unlock financial success, you definitely need management accounts. But what do we call audits? Audits are after those management accounts are produced internally, they're handed over to an external person who we usually call an auditor. The auditor now does their own findings to confirm that these accounts you've given to us, they are true, they are correct, and they are fair. And typically they'll come, they'll visit your company, they may do some inspections themselves. They will ask for your invoices. They will ask to confirm the staff that you put there are working there. They can ask for some contracts to confirm some business is really happening. They could also ask you for receipts and invoices. And when they see that everything is confirmed, they obviously ask for your bank statements. If they see everything is in line, they give you an opinion page to say that this account is true, this account is provided and is correct. These type of accounts, when done externally, called an audit, is what we now give to your investor. So the investor sees this, and the investor, it is produced in a way that any investor anywhere in the world would see it and understand it, because they are produced using international accounting standards. So we know what to do to make sure that is the case. And when your investor sees it, they're like, oh, wow, you're doing very well. Or I'll give it another year before I invest, but I want you to concentrate on how you can work on these areas to see that we can work together. And they are also an indication for you as an individual of how you're doing. So the importance of this, I think I already went through this slide. It makes you make decisions because they are data-driven. It helps you in your performance management because you see how you are doing and make sure you do better. And you also control your costs. You don't overspend on some areas over the other. And then also, because you have a budget now, you are able to work with budgets and you have an idea of how you spend. And it also helps with your compliance. So before I move to understanding audits, while talking about budgets, I'll just like to mention that there's some important areas of a management account that you should note. So the management accounts, apart from telling us how well we're doing or how well we need to do, also shows us other reports that helps us to be better business women. These reports are things like accounts, people that owe us. So when you've done business with somebody, instead of trying to mentally remember it, your reports show you who is owing you. And it helps you to chase as at when due, especially when you're in a more formal sector where you are doing business with people and you ask them to pay you 80% now, 20% next month, or pay me 50% now, 50% next week. You don't forget. You don't blame somebody else. So it gives you the opportunity to look at your reports on a weekly or monthly basis and see who is owing and chase immediately. And also, the thing about that is you can also work on discounts. Sometimes people say, pay me now 80% and I'll give you 10% discount and you can pay the balance later. So it can help you with cost savings because you are planning better. The reverse is that for the people you owe, you are also able to track better and make sure you have enough money to pay as it's coming in and pay as it is due. So you are able to have good business relations with your suppliers and not have issues with them because they help your business. So that's another thing I wanted to mention. And then even banks will ask for your audited account if you wanted to get a loan from them because they want to see how you're doing. They won't just take your bank statements for what the business is doing. Now talking about budgeting and compliance, I think I already spoke about this, managing your accounts, having realistic budgets. We can help you draw budget. Realistic budgets are things you don't say you want to only spend 50K a month on fuel, where you know that on a normal month you're spending 80. So we have realistic budgets, like I said, and then we also help with regulatory and compliance. Regulatory are just other things that you need to do depending on your sector. Some sectors need every staff to have insurance. If you're working as a construction person and you have people on construction sites on high buildings, you need to have an insurance. So we would walk you through all of those things that are compliant that you have to have. If you're medical, you have to have a HIFAMA, that's another license. If you are a production person, you most likely would need to have, what's this one called? It escapes my mind now. The one most people have that it's on almost every item of consumption. NAFDAC, thank you, NAFDAC. So, so we'll let you know what it is so that you don't fall foul of the law because everybody's looking for the opportunity to put penalty and interest on money that we're still finding. So understanding audits, I think we went through this already. So the audits need to be accurate, they need to be systemic, and they need to give you the information you need. Remember, the information starts from you. You need to understand your company. You put sweat, you put passion and all of this into it and the direction, but we need to make sure that the is communicating where you are going and what you're doing. And the numbers help you see how well you're doing and where to put your energy in as you go. And the audit is done independently. It's not done, like I said earlier, internally by a staff. It is done by an external party so that it can give confidence to the other external people who would draw information and comfort and support from it. So it's somebody externally saying, yes, you can trust them. It's like when you go to a supermarket and say, I want to eat. You go to Chicken Republic and you want to eat. Chicken Republic would never tell you, oh, it's too sweet or it's not sweet enough. But if somebody leaving Chicken Republic independently entering the car, you can say, sorry, what did you think? Oh, they're nice. I come here every Sunday. Based off of that, you can go. So that's what it is. It's somebody else who is a professional putting the accreditation on it based off the work they've done on it. And it has to be accurate and has to comply. So I've said the importance of audits. The audits are a compliance a form. As most businesses may not need audits. It depends on what they're going through. But if you need to get some form of loan, if you want investment support, if you want external support, then you definitely need an audit. So if you're in this conversation, in this room, I believe you're in the right place. It gives investors confidence. We spoke about that. It helps you to detect stuff as well. You know, a lot of things are detected at the point of audits. You detect fraud, you hear about investigations at such times. Oh, so all these invoices were duplicates and the man was giving us the same invoice and we never knew. You hear about collusions with accounts and somebody. So all of that is exposed because the accountant may not tell you if it's a big entity, all that they are up to. Okay, so a lot of prevention and detection happens at the point of an audit. So compliance is very important. Detection and prevention comes to light at that point. So what can Wells do? Wells can support you with the financial support I've discussed since I started this call. We have tailored solutions designed for all types of Nigerian businesses. And I believe we work with a lot of sectors, if not all sectors. We have a passion for SMEs. And even our prices are SME focused because our passion is that more businesses need to flourish. We see that the SME sector in Nigeria is really growing and a lot of people need to be given a chance. So we help the companies with the tailored accounting solutions, with the audits, with tax support, and just even general financial diagnostics. Can you come and just help me look at my business and see where I can do better or see why things aren't adding up? Or see how I'm not making money despite even keeping a track of everything or how my expenses are going. So we also help with all of that at our Wells Accounting. The benefits of working with us is, like I said when we started, we are female-led. I run the company. My name is Agbeke Ogunleye. We are a Nigerian company, so we all feel your pain and we understand, and we have the relevant data. We have a lot of people that are already in your sector, so we have sectoral advantage. We can give you information, even if you don't have it, of things that you should be looking to. And because we are experts, we can support you with information that you require, that you may not know, and that as they are coming out. So as information is coming out, the new tax laws coming out daily, new things happening in different people's sectors, we can support with that. And then finally, we also make sure that on the places you have compliance issues, we can also support with that. So the key takeaways as I round up this conversation is that financial management is crucial. We cannot overemphasize it or overflog it. To have accurate records, to have is not even something that is negotiable, because as a business person, you are first of all, your chief financial manager before you become your chief operations manager and every other manager that you are. So the onus is on you and the responsibility is on you that you make the best decisions with the information that is accurate. And you have a supportive network in DealWoman, as they have created an avenue for us to make sure these companies thrive. So that said, I'm just going to pause and thank you so much for your time and for listening. I would like to put my number, our email address, website, LinkedIn. We have almost all the social media. And please feel free to reach out to me or to us if you need anything. But I'll pause now and ask so that you can ask your questions. Thank you so much for listening and for your time. Thank you.
Wow. Okay, so I'm echoing. Which one should I go off from? Is it okay? Okay. Can you hear me? Can everybody hear me?
Yes, ma'am.
Yes, ma'am.
Thank you so much, Madam Mrs. Agbeke Ogunleye. Thank you. That was well delivered, world class. Thank you. Highly informative, loaded. Please, let's appreciate Mrs. Agbeke. I know somebody's hand is up, but let's say thank you. Enough thank you, please. We are not paying, so
Thank you, ma.
let's say enough thank you.
Thank you, ma.
So I can imagine how much it would cost to get her to
Thank you,
take
ma.
this session.
Thank you.
On a good day, that is paying. So it's a beautiful day. So it's beyond good. It's a beautiful day. So we have it free here. Thank you so much, ma. Well delivered beautifully. Thank you so much. Okay, so I know there are questions. I don't know if there are any questions. So, but I like our ladies to take their questions straight away rather than typing, because they will be learning to pitch. So the more they can talk, I don't want raising of hands. You're not going to raise hands with any investor. You're going to have to talk to them directly. So Luakemi, your hand is up. You have the floor. Please ask your question.
Thank you, ma'am. Good afternoon. Thank you, Mr. Ogunleye. I hope you can hear me, please.
Yes, I can. Thank you so much.
All right. God bless you, ma'am. Thank you for your time. Thank you for the lecture. Okay, so maybe my questions may not really be among what you have taught, but I'm wondering. Okay, I am into consulting, just starting out, right? Business consulting. So I've been asking myself, okay, how do I go? Of course, I'm registered with FIRS already. I have my thing, and then every month they send me filing returns and everything. So how do I go about these things? Okay, I've been filling the form on their website. But when it now comes to tax, all those ones, how do I go about those ones, please?
Okay, thank you very much for that question. That is a very, very crucial question. Most businesses advise that once they start, the government is actually quite generous. It gives about 6 months for you to focus on your business, CAC registration, looking for staff, putting in the laptop and everything you need to do. But by the 6th month, you need to register with FIRS as a very important, and they give you a TIN number. With that same number, they expect that as you make profits, you pay your VAT on a monthly basis or withholding as well. So the VAT, like you said, is what you do on the Tax Promax website. And the withholding, as you have business, is when you pay a percentage of your income as well to FOLIRS. So if I hear your question well, is it how to manage all of this? To be honest, there is no shortcut, but that you need to know the right dates and when all of these are due and the right calculations. So for someone like VAT and with FIRS, it's due every 21st of the month. So even if you do not have any payments to make for VAT, you are expected to remit a nil return by the next month's 21st. So in 3 days' time, Friday, all the VAT for companies nationwide need to be made on or before this Friday, 21st, for the month of February. Okay, so that's just how it works. Even if you are a non-for-profit, if you are Shell, if you are Waste, whatever kind of company you are, you need to do some form of tick boxing, whether you just go to say nothing happened or you go and do the calculation and make the payments. And depending on the consulting sector you are, there will be different types of tax and regulatory work that needs to be done. So you can reach out to me to give you like a calendar of what needs to be done. But definitely there's VAT monthly. There is withholding. Withholding is an advanced tax paid, and there's also computations for these things. So it's not a flat rate. If you start having tax staff, there's also payee. So as you pay your staff, you need to do a tax deduction before they are paid, and you need to decide whether they'll be doing pensions as well. When you're under 5 employees, you don't have to do pension, but once you go over 5, it's necessary. So there's a couple of things that you need to keep abreast with. At the end of every year, you need to do a filing called H1 in January to make sure that all the payments you've done for the year before for your staff are complete and correct. You also need tax clearance at the end of every year as a company to make sure that you've aligned with all the taxes. So there are a number of regulatory hurdles, but don't let them scare you, because I always tell people it's as you grow, it shows you're growing, and your compliance too should grow as your company grows. But if you wait for your company to blow before you start doing it, you would be reluctant. Like, I'm a Christian and we pay tithe, and you hear all sorts of stories. If you pay tithe when you were getting 100 naira, when you get 10 million, it won't be a problem. So if you look at it from that way and do your own part, it will be the best thing. You hear a lot of conversations with people saying, "Oh, but I don't have water, the government did not pay me, there's no road on our streets, we have not had light in 6 weeks," but your business is running. So let's focus on the business and know what's not working. That's just what I have to say.
All right.
Thank you, ma'am. I'll reach out like you said. Thank you.
Okay, Aisha, right, your hand is up. Go ahead, please.
Yeah, well done. Thank you, Mrs. I've forgotten the name. Okay, so my name is Mrs. Advocate. Thank you very much. Actually, I've been compliant. I've been filing my tax. I'm currently doing my audit, the financial audit for 2024. And I am currently undergoing the NAFDAC certification process for my products. But my question is, I have an auditor. Let me say I have a financial accountant that I've been working with. But then I feel I am not getting because I'm afraid of numbers. Once I see any number, I'm off. Like I don't know how best to describe the emotions I have about numbers. So no matter how hard I try to understand the basics, I've been struggling with it. So that was why I outsourced that aspect. But then the firm is not giving me what I actually needed to know. I'm not getting that full benefit of having a financial accountant. I know there should be a monthly like analysis of what I've done for the month. The firm should be able to guide me on some financial decisions that I made last month that affected me. Because along the line, this is March, she's just giving me the report of 2024. Which was supposed to have been done earlier, actually, for me to plan my 2025 effectively. So now, my question is that if I am to adopt the service of your firm, how can I think it should be a personal question, actually, but I'm just putting it here. How do I avoid being, I've been paying the former person, but I want, with the way you've related and you're being SME friendly, I want to believe that you understand my point of view. How will I avoid paying twice for the same service, even though the first one is not effective? But I actually want to really know my business numbers, understand my financials, and, make decisions the way they should be made, not just doing things in vague. I don't know if you get my question.
Okay.
Did you get her question?
If I hear you well, yes, I did.
Okay.
Yes, I did. If I hear you well, I think this situation is a two-way situation, if I can be very honest. Sometimes we ask accountants for things that we don't understand or things that are not very clear. A lot of people being asked what you're telling me now will paint the other accountants as inefficient and tell you, come to us, we know what to do, and ditch them. I come from a school of thought that there's enough room for everybody. Yes, we want to increase our number of clientele, but I would rather let my colleague accountant who is working with you now have an opportunity to understand how to do a better job with you. So what I want to advise is, if you have a sit down of what you would like them to do better for you, and explain what it is you're trying to say. First of all is, late reports are not encouraging, because if I'm saying in March what I've done in 2024, it's not giving me information that I need. That is a good place to start. Another thing is, there's no way we can run a business or be in a room like this and say we are afraid of numbers, because we deal with numbers everywhere. You wake up in the morning and the first thing you look at is numbers as your alarm or your telephone or your wristwatch. You go into the bus and they tell you 25, 250, and you are dealing with another number. When you're buying or giving services to people, we're working with invoices, you're looking at your bank balance to make sure you can do things. So when they now put those numbers together to guide you, we can't run from it at that point and say we don't want it. We need to confront those numerate fears and make sure we deal with it so business can flourish. So I think for you, understand what is currently being done now and how you can do better. You said your business was into consulting. Then, I think we should be able to have a conversation. If you want me to be on that call, I can do that for you for free, because I'm not taking on the job, so that I don't think possibly there's a way you want to explain it, or possibly there's something he's doing you don't understand or appreciate, so you're not seeing it being done. But a lot of communication solves a lot of things. So there's no point taking the job from somebody who is doing their best and it's not being appreciated. So I've put my direct number on this group here, not the one that was on the slides, so that you can reach me, send me a message. I'll see when I'm available, and it will be a short call just to see what they've done. And guess what? We might finish the call and then both of you realize that a lot of work has been done and you just never looked at it because of your fear of numbers. So let's first address what has been done and at least appreciate it to see how we can make it better.
All right, thank you very much, ma'am. I'll
Thank you.
send you a message. Yeah, thank you.
Okay, thank you.
Thank you. Anybody else with any questions? Any clarification? Any questions? Please ask all of the questions. Yes, Adeshile, don't ask me questions about audits, budgets, tax issues, please. Ask all the tax questions. The tax madam is here. Don't ask me. I don't know. So I know where my own strengths are in. It's not in tax, it's not in audit, it's not in putting accounting together. Good. Thank you. Adeshile, you have the floor, please.
Hi, good afternoon, and thank you so much for the information. It was quite enlightening. And I think we've met somewhere in Manchester, probably Redeemed Church, but we'll talk about that afterwards.
Oh, okay. Hello.
Hi. So I just wanted to ask, again, for clarity, this is my point. Now, for example, there's this business, we want to upscale. We're not doing so much, but we know there's potential for probably expanding and upscaling. Now, for example, we're having probably 500,000 coming in every month. And just because we just have a treatment room, and we know if we have more, we can get more services done. Now, question one is, we talked about TIN, VAT, payee, exactly if you have more than 5. But now my question about this is, at what point do I audit my account? I think you said this earlier, but I missed out. Is it when I make a certain amount that I audit this account and do this tax clearance? Because personally, I feel if I'm not making so much, the money is going back to the business to buy materials. It's going back for fueling. It's going back for operational cost. You're paying salary. So at what point do we audit this? Everybody wants to write a business plan and investors wants to come in. I'm not saying I want to play about with figures, for projection. But if I'm an investor, I would want to see that the business is doing at least to a reasonable stage, doing okay before I want to put in money there. I don't see someone's account saying, okay, every month you're doing 200K, 150. Why would I want to put in money there? So is it okay to play about with figures? Well, maybe we can say to project. That's one. And at what point do we audit and get all these things and put in structure in the business? So that's
okay,
it.
thank you for that. Yeah, thank you, Adeshile. I think I understand the first question a bit more than the second, but I would answer the second. And if I don't answer it properly, please just guide me again. In terms of when to audit, so there's some things we don't realize when we're starting a business. The type of business you have goes a long way. We all go to CAC and then do different types of companies. And a lot of things I said in this meeting was the blanket, assuming that we were all a certain type of company, right? So there's different types of companies. You have limited, you have PLC, you have enterprise, you have ventures, you have partnership, there's all sorts. The type of company you are kind of gatekeeps you over whether you do some of these things or not. If you're an enterprise, nobody really expects that you do an audit because you have already come to say, I just want to do business. You're just a self-employed person, right? So I'm not even sure that you will be having questions about investors because if investors should have any conversation with you, you would have to be limited and PLC. So my assumption is that everybody in this room was a PLC or an LT, limited liability, meaning that they are separate, their entity is a different person from them. So if that's the case, then you have to do an audit. So if your company ends with the word limited, whether spelled out or LT or PLC, then you definitely have to have an audit. When should you have an audit? An audit is a 12-month document. So you and your accountant determine where your year end is, and then you do 12 months. You are allowed in your first year of being in business to do a maximum of 18 months audits. So say you start you start your business in July, and July 2023, you can't do an audit for 6 months in December. But in 2024 December, you can have an audit for 18 months. And then after that December, subsequently, it will be 12 monthly every time, right? So that is the question about an audit. So in terms of whether you can give an investor projected information, I think that is a no-no because they are working with what has been confirmed. To be honest, most investors even ask for a minimum of, I think 3 years. It's rare that investors will be doing business with unknown, untested information. Not impossible, but very rare. IT has brought in things to happen now where people are selling their ideas even before it's put in paper. But like I said, that is super rare. But for when you need to use actual confirmed information because you go to, okay, for instance, the only time they can go with a projection is if maybe you have somebody who's hello?
Yeah, I think we went off
Yes,
the
I
last.
apologize. I got connected.
Yes. Okay, so the questions, do we still have anyone with questions? Any questions? Yeah, Rebecca, go ahead.
Thank you, Ma. Good afternoon. Okay, so get the third point for role of financial projections, Ma. Please, if you can repeat it. I got the future forecast purpose for business viability, but I didn't get the third point.
Let me go back to my slides. Okay, for government reporting, to ensure compliance.
Did you get that?
No, Ma, I didn't get it, please.
For government reporting to ensure compliance.
Okay, thank you very much.
You're welcome.
All right, thank you, Rebecca. Any other person? Yeah, Ejiro, your hand is up.
Good afternoon, ma'am.
Good afternoon.
Okay, thank you for this insightful training. So my question is, you're talking about how that the model, your business model, is what will determine the kind of audits you should do or the kind of record expected to keep sort of. So please forgive my asking. Are you saying for, let's say, the non-profit and what do you call it now, social enterprise sector, auditing and record keeping is less strict compared to company limited by very limited liability companies and PLCs? Like, can you make a bit of clarity on what is applicable to both ends when it comes to financial reporting, tax, and all of that now, please?
Sorry, Ejiro, the line was so faint. I couldn't really hear a lot of things you were saying. Please, can you just, I couldn't hear you.
Okay, ma, can you hear me clearly now?
Yes, I can hear you now.
Okay, so you said that the kind of business model you operate is what will determine to a very large extent.
Your
for this
network
thing that
isn't clear.
Oh, okay.
Do you want to try typing the question? Maybe that can help.
I don't know. Is this better now?
Yes, this is better.
Okay, I'm so sorry. So I was asking, you mentioned that the kind of business model a business operates will determine to a very large extent the kind of reports, that's including audits and whatever is expected of them. So my question is, does it mean that for non-profits and let's say social enterprises, the expectations are quite are less strict when it comes to the financial reports, taxes, and all of that, as opposed to limited liability companies and PLCs? Can you just make a distinct clarification on both ends to see what applies and what doesn't apply when it comes to financial reporting?
Okay, so that's a great question, Ejiro. Well, I just want to let you understand that every business and every type of business has different rules and regulations. So it's not that one person can register an NGO and then they get let off for some things. But the government has been able to look at different things and has put in different rules to guide those things, i.e. the rules that guide medical won't necessarily guide construction or work with someone that does a hair salon. So they don't have less stricter rules with NGOs. We have about 5 NGOs. NGOs actually prepare accounts because NGOs also want grants from time to time. Bill and Bill Gates Foundation will not just give you something because you have good intentions. So you need to show and prove that because you have been given money and you have the opportunity to spend it for a good cause, this is how you are spending it. And we need to understand that all of this conversation we are having is for financial structure, financial integrity as a company, and financial monitoring. And you cannot tell me about integrity if I cannot trace it to where you are showing me you spent it from. So yes, NGOs go through the same thing. It's just that when they have to spend money, they don't have revenue, like you call it revenue or I call it revenue. It's inflow. People are giving. So if in an NGO, they can't say anybody is owing them, because if you decide not to give, then you won't give. So it's a different type of account. They're governed by different rules. It doesn't make it different. It's just because of where they are. If I go to Ghana and they don't pay a certain kind of taxes, they will have other things they do. And they do that we don't do here. It's just that kind of looking at it. So it's not easier, but they're different. But they also have their own regulations. So whenever you pick which one you want to do, then you have to align yourself to what governs these people that are in this situation. That's more what that's more the kind of thing it's like. So nobody has it easy. So you can't say I'm going to leave LTD and do NGO because those ones are falling, However, the government recognizes that if you're an NGO, you are doing a good cause, you are trying to do some social alleviation project or trying to do something for a good cause, So NGOs typically don't pay taxes. But if you want to now go into an NGO and then you are going to have some other means of revenue, they can also lift that veil that makes you not pay taxes, and you will pay taxes. So how can they find out that? By your finances. The financial records you show us is what makes us understand what you're doing. I hope that I was able to answer that question.
Okay, ma, very clear. Thank you very much.
Thank you, ma.
All right.
Okay, any other questions? Any other questions so that we can allow our guests to leave and take our next session? Any questions? Tax, the borders around tax, financial management, audit, editing, if there's anything called that's editing. So what if you remember or you recall in our first session, I talked about the scattered accountants, the shattered accountants, and the chartered accountants. Mrs. Agbeke, I've seen financials in this country. I don't know, so many accountants can prepare a lot of things, and I just call them shattered. They shatter the whole thing. Then there's some that are scattered that will not. So I've seen Excel. So when we see the audited financials, so my strength lies in reviewing an audited reports. So I look at it and say, okay, it's investable. These are the reports. So you should provide the reports. The businesses should provide us the audited reports. When we look at it and we're like, there are some you now say, so unlike who spoke the other time, I'm very good with numbers and figures. So I can see where you manipulate. It's supposed to be 1,556,000 naira, and you are writing 976,000 naira. My brain picks that quickly. So I knew something was wrong, and I said, see, give me the Excel where you worked on this. Let me just see. Oh, he said the auditors worked on it. I said, fine, just give me the Excel. And I was clicking the Excel sheets to see, to adjust if there was an adjustment needed or there was none. Then I'll go to another sheet, then there was some. And I saw the complex ones, he moved it from one document into and just typed in the numbers. They are not automated. That is a scattered accountant. Because he just messed up the entire thing. And when we said we need to rework these audits, you need to get an auditor, we don't take that. We are not legally qualified to do that. The guy was like, I paid him a lot of money. I said, sorry, there's nothing we can do. I mean, the figures, I computed it out for him. And he said, yeah, this is not correct. Recently, we had a company that does about 500 million, 600 million. They're looking for 2 billion naira. They've been around for years, up to 40 years. They've done well. They just finished their audit for 2023. And they have filed it. So they've gotten their tax clearance. And we need documents for investor engagement. The first page where you have the summary of the financials, I just looked at it and then flipped to the next page of where I will have the statement of accounts to align with the current year. It was not aligning. By the time we came back on another day and he had met with the auditors, there was an error. And this thing has gone, FIRS has been filed, LIRS has been filed. That one is a shattered, shattered because I don't know how we're going to, I still don't know how we are going to rectify that. So these are serious issues. Yeah. So please, Mrs. Agbeke is here. Ask all your questions. The one you can ask free of charge for now, ask it now.
I'd just like to say that I'm very, very happy to be in this room. I feel particularly privileged to be having this conversation. We as well, also, I used to be in full paid employment up until about a couple of years ago. So not only am I a person who understands accounting, I'm also walking this road. The same way you're walking it, I'm doing the projections. So I want you to see me as not just a learned colleague, but someone who, as a business colleague. So if you put my number hash to me, and then it's not shakara. I'd love to answer everybody's question, but before the end of the day, I promise that within 24 hours you'll get my response. I work till late in the night, Miss Comfort knows. So even if it's midnight, if it's midnight, you can see it. You don't have to reply me, but I'll make sure I respond. And I wish all the businesses here the best ever. You know, a lot of people out there are also trying to do what they can do, and sometimes they may not be equipped for fraud, or that they're trying to outsmart you. Sometimes things happen, and it happens to the best of people, but together we can make it better. So if you already have an accountant and have some questions that you need to ask, reach out to me. I'm not going to try and take over another accountant's job for any reason, but please, please, and please try and work out what all you need to do and do your part. A lot of business people we work with are too busy to give you what you need, but want you to give them accounts. They cannot give you accounts if you cannot give them your completed management accounts, or bank statements, or you're not being open with them, please, so it's two-way streets. The SMEs are not easy. Sometimes we see big companies and SMEs are not easy. Okay, so thank you so much for your time. I don't know if anybody else has any question. I think I can take one more question, and then I will just call it a day. All right, there's a lady, Oluwakemi.
Yes, just quickly, please. Mrs. Agbeke needs to go. Go ahead.
Hello?
Yeah, go ahead.
I don't want to do all this. I'm working for someone, I'm working for a client who does not have audited accounts and we would need it. And I want to recommend this to him.
Sorry, Kemi, you're breaking off. Can you help me? Can you say that again?
Yeah, don't worry. We'll come back to you on that. We can always make. You can always reach Mrs. Agbeke or reach out to us. Yeah. All right. Thank you so much, Mrs. Agbeke, for your time. We're so grateful.
Thank you for having me, ma'am.
Working with you. So it's DERA, DealWoman Investor Readiness Accelerator. It's the female ladies or women wing of the deal room, just to ensure that we close the gender gap in funding. So thank you so much, Ma. Thank you for your time. We appreciate it. God bless you so much.
All right. Thank you so much, Ma. Okay. All right. Thank you, everybody. Ms. Comfort, I want to say a big thank you for trusting me with the ladies. I find this a privilege. Thank you so much. Have a lovely day, and God bless everybody. Bye-bye.
Bye, ma'am. Thank you. Okay. So we'll take a break for about maybe we'll come back 1:40. Is that okay? So we can rest a bit, and then we'll come back for the next session. Is that okay?
Okay, ma'am.
Okay, it is, ma. Thank you.
Okay,
Let us go short.
So we're going to be reviewing the Excel projections to help with the projections and the financials we have. So we'll come back to deal with that Excel sheet by sheet.
Wow, I can't wait.
Thank you, ma'am. Well appreciated.
Right, thank you. So we come up. So please, when you're coming back, ensure your Excel is opened in Excel.
Okay, ma'am.
Noted, ma'am. Yeah.
All right. All right. Thank you, everyone. We are back. We are back.
Hello.
Please. Yeah, hello, Mouse. Right, we are back. Do we have any questions before we go on? Any general question as regards your business financials and funding?
Yes, ma'am. Good afternoon, all. Good afternoon.
Yeah, right.
I'll be following, and I must really say it's really a very powerful and exciting session. But ma'am, there's something, a particular assistantship you say you provide us with, an AI that does websites, that programs this business cover, that you're going to drop it for us. So I've been anticipating to see it.
It's just your ChatGPT. If you ask your ChatGPT, will do it for you.
Okay, ma, what about website building? Because I'm also into website.
When next week, right, Faith, you need to tell me if that's correct. And when we're on the Microsoft route, we'll be doing all of that.
Okay, ma'am. Thank you.
Yeah, let's focus first on the financials.
Okay, right, ma'am. Thank you.
I'll take us through a session on prompt engineering and what my personal learning journey using artificial intelligence and how I use it to write.
Okay.
And a couple of things. Yeah, so I'll take us through that.
Okay, ma'am.
So, but now we need to concentrate on the. But a quick one, if you go on your chart, you check GPS extensions. I think it will give you all of the other things you could do with ChatGPT, create websites, etc., etc. But for now, it's not the concentration of this class.
Yes, ma'am. Thank you, ma'am. I'll wait.
Yeah.
Yes, ma'am.
Right. Please too. Thank you.
Yeah.
Okay, so I want to go into the parts of this accelerator that has to do, the single most important thing is your financials and projecting, being able to project to investors, whether you are starting or whether you're a startup or you are starting or you don't have any basis of financials, or you have. This particular Excel works both ways. So I would assume that everybody here is starting out. If you then have an existing business, I will comment on it, what you should do on this Excel. So follow me. I'm going to make it very simple so that nobody leaves this accelerator saying, I do not like figures. Figures has to be your friend, like Mrs. Agbeka has established. If you're running a business, most businesses that go down or that are not sustainable is because the owner, the driver herself or himself is not number savvy. And usually that's born out of the fact that we think that is finance. So I didn't like accounting. I didn't even like maths in secondary school. Everything you're doing in the finance in your school is just arithmetic. 1 + 1 = everything. There's nothing. I will tell you when the complexities are, and it will just compute on its own when you just impute a figure. So it's really, what was that Lacombs that we were using? Well, some people may not like Lacombs either. So it's just 1 + 1 = 1 × 3 = 4. So for example, you want to know what is your total sales for the year. It's just the total sales you either place to one side. For a startup, it will be how many of your product or service would you sell every day? So assuming you're doing 5 days in a week, that's 5 days times, maybe you want to sell 5 products every day. 5 × 5, that's 25. Everybody knows multiplication. It has nothing to do with whether I like figure. You do multiplication every day. So you see, it's basic. So you multiply 5 × 5 by 25. You've gotten the total for a week. So if they tell you, what is your total revenue for the week? It will be that 25 times how much each person paid. That's all, multiplication. If it's the same thing, you'd be adding. You add January 5, you add February, maybe 10, you add March, maybe 15, you add April, maybe 5, you add June, maybe 0. You now add for 12 months. If you want to save yourself the stress, maybe there are 5 in a month, and that's what you want to project on for the next 12 months. You just multiply that by 12. Simple. So it's not complex, it's just plus and minus, division and multiplication at the basic levels. That is what this account is. So don't bother, the Excel is just another version of your Word document that you use every day, or your PowerPoint to present some nice slides. They're the same. No complexities. Don't let anybody bore you or anything. See, it's when you are doing economics, or you are doing engineering maths, or you are an engineer, calculating the circle of something, or you are an architect. If you are a tailor, you're already doing maths. You are a baker, you're already doing maths. You work in the spa, you're doing your maths and your arithmetic every day. So I'm going to share my screen, ladies and gentle ladies. It is just a basic maths. It's either multiplication or addition or subtraction or division, nothing more. Simple as ABC. So every time you write your financials, you are looking at your assumptions. You must assume some things. Some assumptions are constant. Some assumptions are based on the markets. Some assumptions are something you derive from research. Some assumptions are just there, like tax. We assume that you will pay tax. Even if you are not going to pay tax in the first year, 2 years, 3 years, or you are not even paying, you are an NGO, no problem. We just assume that you're paying tax. And if you are not going to pay tax at the end of the day, it's even okay, because that money will come back to you. It shows efficiency. So like I said, I'm assuming that this business is a startup. Startups, maybe you have a startup status in Nigeria, so up to 5 years, you're not supposed to pay tax. If you are a startup, generally, you're not supposed to pay tax. So this is where the mathematics is engaged. So you just come here and you just write 7. If you see now the analysis is here, all you do is change it from here. So for this Excel, everybody has it as 7. Screen just moved to something else. Everybody has it as 7, as a 30%, right? Can everybody hear me?
Yes, ma'am, we can hear you, ma'am.
Yeah. So
yes, my 30%.
It's 30%. Good. If you don't know it's 30%, say, I don't think it's 30%.
I don't think it's 30%.
Okay, so what do you have?
Okay, I'm coming. I'm not very sure, but let me try. I mean, sorry, ma, how did you arrive at 30%? I'm sorry, please. Is it 7 multiplied by?
So click on your 30. If I remove this 7, 0.3. Takes it to 30. Did you see it?
I think she's
I think she's asking that what criteria, what makes it 30%? Is the tax rate?
Max, okay, so what makes it 30%? So what is your tax in your region? What's the tax rates? What's tax for your business in Nigeria? How much tax are you paying or are you supposed to pay? Do you know?
30%.
30, right? Is it 30?
It's 30.
It's 30.
Yes, ma'am.
30%. So that is how you get your 30%. Are you clear? So the government says
Please,
you
I
should.
think I have something different. My Excel sheet is different from what you're sharing on your screen.
No, it's not different, it's the same. What do you have on your own Excel sheet?
I have at the bottom, I have payback, investment offering, benchmarks, personal net worth.
Go to the first sheet, assumptions. Do you know how to scroll to do that in
Yes,
Excel?
yes, I found it.
Yeah. So please, everybody go to assumption sheets. Assumptions sheets. That is the first thing. Every time you put your financials together, you must assume some things. You will also assume your long-term interest rates if you are earning interest. If you're going to get loan from a bank. So whether you are getting a loan from a bank or not, what is the best assumption for loans in Nigeria? Long-term interest rates. Can anybody tell us?
Excuse me, ma.
Yeah.
Is the tax rate flat? Why must it be 30%?
Is it 30%? Your
What
VAT
I have
is
there is
7.5%. But paying tax as an organization is also different. I hope you understand the difference. So there is VAT. Every time you are selling something, you are supposed to collect VAT on behalf of government. Right?
Yes.
Yes, ma'am.
So
That's it.
everybody relax, just relax. We are discussing, it's something that Mrs. Agbeke has said. This is just the figure part of it. So you want to be able to do this on your own every time. So I'm saying that taxes are different. There are two types that will broad-based that small businesses in Nigeria. If you audit your reports, on the journey to auditing your reports, there is the tax that you pay, which is 30%. But you also charge VAT differently. So I'm not talking about VAT here. So tax is 30% in Nigeria. So you remember that when you go to FIRS and they are going to tax you, somebody said, oh, they gave her a bill of 10 million. It's because the company is not paying tax or filing zero returns because they are not profitable. So when you are profitable as a business, government in Nigeria is supposed to collect 30% of your net as tax. Yet, Kanatricia Enterprise, your hand is up. Yeah, I can take your question. Go ahead, please. Okay. So that hand was just up probably mistakenly. So do we get it? So you make assumption for your tax. You are taxable as an institution. Then what are the long-term interest rates in Nigeria? Has anybody collected loans before?
No, ma, but I have an idea because At least I have a friend who works with a microfinance bank. So I think it depends on the amount you're taking. Like the higher the amount, the higher the tax. And then the duration.
Give me an idea of what it looks like, tax.
Okay, so I think the lowest they give is for a year, they can charge as much as 15, 20, 25%.
Good. The 15 could be maybe half year. So we are looking at, let's say, if we're doing this, let's say we give a long-term interest rates at, say, 35%. So you see, I just clicked on that 0, and I'm going to take it to 30. So everything turns to 30. Did you see? So turn your own to 30 as well. Long-term interest rates is about 30% generally in Nigeria. It hovers around 30. I got, there's a request I'm supposed to review. The all-inclusive for that loan of 15 million from FCMB, or is this Sterling Bank, is 48.3%. All-inclusive, 48%. So at 30%, we may even be shooting ourselves in the foot. So let's look at maybe doing 35. In case it is 35, it will reflect on your account straight away as 35. You can always come back here and change it. So we are assuming that tax rates for our businesses is 35%. And it's not a far-fetched assumption. It hovers around 27 to 45, 48% as I speak today. So what is current interest rates? That is anything falling due within a year. Current, I don't think there's even a thin line between current again. Some people do 10% monthly. That goes to about 100% in a year. So let's say that is about 8%. We do 8 here. So do you have 8%, 35, and 10% and 30%?
Yes, I've done that.
Yeah. But everybody is on this page like this, right? You see how I edited it. So that when your accountant does something, the first thing you ask is, what were the assumptions on the financials? If somebody is writing your business plan, if somebody is doing your projections for you, what were the assumptions they were using? There may be more of assumptions. That's where there's order, which you can fit in 0, 0. So the question is, really the basic ones are these ones. So are we okay? Everybody has 8, 35, and 30, right?
Yes, ma'am.
If you don't have, say, I got lost, I don't know how to get my 35 and 30.
I'm lost, Mao. I'm lost, Mao. I don't know where the 8% is from.
Okay, good. Do you have Excel or you're working on your phone?
I'm working on the phone.
That's the challenge. So click on where there is 0 on current assets in January and just write 8. Current interest rates. Just click on January and just write 8. Make sure you are starting in January.
Please, Ma, can you explain what current interest rate means again? I didn't quite get it.
Good. Current interest rates are, if you go to a microfinance and you are charging loan for 1 month, 2 months on money, short-term funds. Somebody is looking for network. Right. So current interest rate is loans that you will pay for within a year. Current, they are recent. They are please, I need us to make sure you are muted. Be muted and turn off your video, please. Have you done it? Do you now have your 8, 30, and 35?
Yes, ma'am.
Good.
Huh? Okay.
Hello, ma'am.
Let's okay, mommy. Okay, mommy, it is. What should you
Sorry.
Did you get it?
Sorry. Well, yeah.
Something changed.
Something didn't change. Don't worry, we will beat out phobia for maths. So that's the plan for this session. I want to ensure that, so you will have page.
No, someone's background is not.
This Excel up to 5 years. And if it is edited properly, it works for 10 years projection. So, but this is month 1, month 2, month 3. So sorry, I think my network went off, so I'm back. So can everyone hear me? Okay, so
yes,
I have to go back. Right.
Yes, ma'am.
Don't calm is where, do you have coffee by your side? We'll nail this, so it's very simple. I just want, once you get it, you can run your business efficiently. You know what you're looking for, and it's easier for you. So don't worry, we are here. If we're anywhere we stop 2 o'clock, we'll go, take, and then anybody that can come back maybe tomorrow, we can take a quick session. You know, I've mentioned that last week. Right, so is everybody, you are able to change it to 8, 35, and 30, right?
Yes, ma'am.
Yes.
Yes, ma'am.
So everybody can do, please, I want to see the 20 plus of us say yes, 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 yes. So keep your yes coming, that you were able to do this. Just keep your yes, 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 yes coming. And then Miriam will tell me if I have up to 20 yeses. If we don't have up to 20 yeses, we are not going to leave this part. It's just basic 101 Excel for this workbook that we're working on. So that when next you are meeting with Mrs. Agbeke and she's speaking, you exactly know what she's saying.
Hello, ma'am. I'm trying to change the figures to 8 and 30, 35, but I can only see 30. 8 cannot be changed. It's not, I'm punching in the figure, but it's not showing.
So do you have enable editing requirements on your Excel?
I don't think I do, but I'll try and make out time to be there tomorrow.
No, we're not doing live, it's online. We're not physical here tomorrow. But yeah, you can come in for office hours on Friday. When I meet tomorrow, I meant online. We can talk about this online or later today. So if you need help, I'm here till after the session and we can walk you through.
Okay.
But please, this is basic. I want everybody to get it here. Click on your Excel. If you check, can you see my cursor around the 8? Can you see it?
I can see it.
Yeah, when you click on 8 and you go up, clean that one off, you can turn it to 9. That's 900. You can turn it to 4. Sorry, so Excel has a way it works. So I'm going to just remove the zeros from up here. So I've taken it back to 4, right? It's only the tax rate at 30, you should leave at 30 because unless you come into this, can you see where my cursor is? This side, where the if statement is. You can change that 3 to 1, it will become 10%. You change it to 5, it becomes 50%. Just try. So have you been able to, do we have up to 10 people that have been able to do this? So just click on it, go up and take it to 8%. How many people have been able to do that? Only 2 people. Okay, so they are yes. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, so we need more people to be able to do it. So that when you get out of this session, you say, you know what, I know how you guys compute your Excel. So you don't have to pay somebody who is not doing the work. So is everyone able to do this now? If you cannot do it, say no, so that I can lock you up for an office hour. Pay me 20,000 naira to repeat myself. In that particular office hour for this. Current interest rate is simple. Interest rate falling due within 1 year. All right, Chef Juliet said I can't, so okay, we will help you out, man. Okay, so yeah, so quite a number of people can do that now. So I think it's only one person thus far that has said no. Right.
I've done my man. It's okay now.
Okay, so right. So it's not a lot. So we'll go to the next point of financials. Now, these financials here is for if you just want to have a basic business financials. It goes into, if you just click, put your numbers, it will be calculating, but I'm not focusing on this particular slide of financials for us. So I'll go to the one that is, now, do you see this place? So don't touch the page for financials because you don't need it. So, but you see this break-even point, don't touch it as well, but I'll tell you the importance of the break-even. It's going to be computing on its own. If you check, you see that As I click, can anybody tell me if I click on this pink, is it pink or burnt orange? What do you notice? What do you notice? Can somebody tell me? Yes, please. Let me know what you notice. Joemi Ventures, go ahead.
Good afternoon, ma. Yeah, I saw variation. I saw variations of values.
Yeah, sorry?
Variation of values.
Values.
Yes.
Okay. And what else do you see? Who else wants to tell me what you are seeing? When I click on 3,450,000 naira, what do you see? This area, what do you see? This area where my cursor is, what are you seeing?
Formula.
Formula. What's that formula computing?
It's computing revenue. Average revenue per unit.
Unit revenue.
Yes, per unit.
Per unit. So so I have this thing here, this water, what's this called now? So this water bottle. This, if you do your financials properly or your auditor, anybody does it well, it should show you the break-even points where you would have started making profits. So this, one of the things it will compute for you is the average per unit revenue. Per unit revenue that I get selling these products. If I produce 1 billion of this, I must know per one how much revenue this particular one is making. So when you say, Comfort, I came to your house, please, can you give me, you produce 1 billion water bottles, it's a lot, just give me one. I'll tell you no, because there's a per unit revenue I'm calculating. This is calculating the sales per unit, a whole lot of mathematics. So leave the top jargon for us. Don't touch this particular slide for break-even. But for each one of you, it will change. If you do a good job, it will never be the same with the figure you're seeing right now. So the assumptions are, we're going to be finding out the monthly unit break-even. We're going to be calculating the monthly revenue break-even. That means monthly units that you have to sell, whether it's service or product, every month, that will ensure that you remain in business. If you don't sell that number, you will be quarreling with your business people. Early February, I was a bit tata in this office because we were not hitting our monthly revenue from January. Because I knew that at the end of 2025, if that, as weak as that January was, if we don't do anything in February, March to manage what happened in January, we're in trouble already. So for every of your product to service, you must know what your monthly units break even is and what your monthly revenue break even is. Investors are particularly interested in your break even. It's a major part of how we decide whether to invest in a business or not. And every business has to have it. So when your auditor has finished your projections based on whatever is existing or one we're projecting must show this break-even point, or else we break into pieces. This is break-even, there's break-odd. So when you have break-odd, then you're in trouble. Is it difficult or easy? Is it easy?
So far, it's still easy.
Don't worry. I'll make it very easy for us. It will not be difficult at all. At all. Just grasp the concepts. So when you put in your own, so I said, don't edit anything here. It's computing on its own. Don't touch it. But we will use the figures here when it computes itself. So this particular slide, this is supposed to have something here. Right. So you see, okay, this is what I should have done. So don't mind what I'm going to do now. You will just notice that I will hide it. So you see that that's brought it down. You will, for us in the deal room, when this financial was made, our average per unit revenue per anything we do is 15,000, and per unit variable cost is 10,500. The average percentage variable cost was 0, and the estimated monthly fixed cost is 6 point something million. So that means that our estimated cost monthly, as of when these financials was worked on, is 6 million. This whole assumption is computed from running the business. So these all figures are interesting. So the monthly unit break even is 1,380 for this financial. And the monthly revenue break even, that means that they must produce 1,380 units of services or products, and then revenue of 20,692,77 to be able to keep running their business for this financial. So your own, we must see it, so we will know. So recall the sessions I had with you on Monday, that I said, write it down, all the financial items, what is revenue, what is cost. This is where we are going to apply it. So I'm going to your market analysis now. So I think a lot of things have been. Where's my A? Okay. Okay. So when we say your markets, this is your markets, 200 million Nigerians are going to buy my product. Really? When I said defining your markets and your customer base. So this is very, very important. You know, you always see CAGR, cumulative average growth rates. CAGR, the CAGR is that, don't worry. Just tell me, who are your customers? So let's take, for example, who wants to go? Who should we take as an example? In fact, who wants me to? Who wants to? Me. I. So I'll start.
I.
Okay, so I've taken the assumptions for your assumptions on the assumptions. So markets now. So give me, who are your potential customers? What are they called?
Are you talking to me, ma'am?
Diabetic patients.
Diabetic patients. Good. How many
other manufacturing?
Sorry? Manufacturing,
okay,
right?
Continue.
No. You are
yeah, manufacturing companies.
Manufacturing companies. That means that spelling, manufacture. How do they pronounce? Manufacturing company. Right. So what else?
Corporate professionals that are health conscious.
Corporate health conscious professionals. For sake of time, I'll just say prof.
Yeah, that's it.
Okay. So these markets, how many of them are you looking out to? So let me start this one from here. So starting here. Okay, so this one I need to go edit it from the source. So we will assume we are starting from 2020. I should have updated that for everyone. Let me see whether that changes. Still gives me 3. I don't know if I can change it from here. So it's not changing from here. I need to go to the source. So let's ignore the years we are seeing here. I'll change it when I'm done now. There's a source document that the source page here that I should change that from. All right. So let's go. So we have, so those are the 3, right?
Yes, major 3.
So I'm going to create a space. Right. So how many are you looking at? So ignore the 2020. So let's say, when did you start your business?
20, let's say 2020. We became limited liability 2020.
Okay. 2020. Okay, so let's leave it at that. So how many patients do you think are potential customers for diabetic patients that you will have in the first year?
Maybe like about 50 to 70.
50. So I'll take the lower quartile of that figure. The next, so what is the growth rate like for diabetic patients?
Like a 2%.
22 or 5. You want to grow this number by how many percent?
Okay, 5.
5. So they grow by 5% every year. So your CAGR for diabetes patients is 5%. 5% CAGR for within 5 years. So it grows from 50,000 to 52,000 people to 55,000 to 57,000 to 60,000. That is how your growth rate will be in terms of this particular number of customers. Now, manufacturing companies will be how many? How many is your projected customer, potential customers?
For each year?
For each year, yeah.
Like about 10 of them.
10, good. And we grow that 10 at how many percent every year?
At 10 too.
At 10. So your cumulative average growth rates for manufacturing companies over a period of 5 years is going to be 8.78%. I'll tell you what we use those figures to understand. Okay, so let's go to the last one. Corporate health conscious professionals. Like, how many are you looking to target?
Let's leave it at the 100,000.
At the 100,000. How many you want to grow it? Like how many? What
like about
percentage?
15%.
15%. So you grow at 15%, you get 100, 150. So cumulative growth rates. So I'm going to have to clean out these ones that I have here so that we can get your CAGR. So the CAGR for your organization for the 5 years that we're looking at is 11.96%. Does that make sense? So therefore,
the number, I can tell the number, but what's the implication of that on the business?
Like I'm going to explain. So it means that in 2022, in the first year, sorry, not 2022, in your first year, I'll turn this one around and, oh no. So I want to, Excel has funny things. So on my own Excel here, I need to pick there's a way I should be able to take this to, let me see. I should do it from here. You're putting the last together. 0. Still not changing. So there's something, I need to go to the starting year, wherever that is computing from. Okay, so this is, let me do a quick engineering maths.
Ma, will this help?
Sorry?
Will I get
so I moved it to year 1, 2, 3, 4, 5 already.
Okay.
Yeah, so in year one of this projection, it means that you are targeting 50,000 diabetic patients, right? And you want to grow those patients by 5% every other year. When you do that for 5 years, your total number of patients that you must reach in 5 years will be 60,775. You are targeting manufacturing companies in year 1, 10 of them, and you want to grow those number of 10 manufacturing persons by 10%. You know that 10% of 10 is 1. So it's
I just realized it, and I think it should increase.
So
it doesn't look ambitious.
Okay, so good. So what do we take it to? Is your business?
We need to take it to about 40%, please.
40, good. So you are getting clarity now. Sorry. So this 40, you just adjust it back here to 40. So 40%. If you grow it by 40%, this 10, that means that your 10 will go to 14. That's 14 to 20, 20 to 28, 28 to 39 customers in year 5. So in year 5, you will be dealing with at least 39 of them as your customers in year 5. Corporate health conscious professionals, 100,000 from year 1. Then you will go at 15% of that, you grow to 115. So you added 15 people. Then 15,000 people, you go to 132. You've added some number. And then in year 5, they are 174,000. So that means that total, your cumulative average growth rate of your customer base is 11.96% when you add all of this and take the average. So you are growing your customer base by 11.9% on average over a 5-year period. So an investor will say, so how do you intend to scale your business? Quite answer, I intend to scale our business based on a cumulative average growth rate of about 11% over the next 5 years. You sound very nice and looking like, oh, really? Okay. So what's that in numbers? Well, we're starting with 50,000 diabetic patients. They grow at 5% every other year for the next 5 years. We're starting with 10 manufacturing companies, and we intend to grow that by 40% over the next 5 years. And then we're going to be targeting corporate health conscious professionals, 100,000 of them in year 1, and we will grow that by 15% over the next 5 years. Oh, really? So what will be your total customer base in the next 5 years? Both individual patients and corporate organization to be 235,715. Did you get it? So when you hire your head of marketing, by the way, you are the number 1. You must target 50,000 people in 1 year. Immediately you are not reaching it, you know that you can never make 60,000 in year 5 for diabetic patients once you miss that mark.
Wow. So when you miss it, does it mean that you have to go and recalculate?
No, you can go and recalculate and tell yourself the quantum truth. Probably you do not have the machinery or the system or the structure to service or to reach, or maybe they don't even like your business. 50,000 people. Maybe you just help yourself and just come back and say, we did 5,000.
Okay.
And so it will mean that you are targeting 5,000, about 5,000 or thereabout, up to 6,000 plus people for the next 5 years. As simple as this market analysis is, you don't have to do anything. Just don't touch the Excel calculations in these places.
Okay, but now I have a question. Now, as you reduced it to 5,000, the CAGR grew. Does it mean that, or rather the number increased? Does it mean that the higher the number, the lesser your growth rate is lower?
Yeah, because you're able to chop at 5%, you can do 5% fast, and you are easy to go.
Oh, right. So the lower the number, the more promising your business is.
It's not necessarily. It means that that's the rate at which you are growing. It shows that the figures are not much and you are growing faster compared to having to deal with the 40. So you brought it down a bit, and it means that you are dealing less with less things and you have more people. You notice that it is your the growth rates increases, but that doesn't say anything to whatever you are saying in terms of whether you are profitable or not. This has nothing to do with profitability.
Okay.
It just shows that, yeah, you are dealing with lesser figures and it just goes up in terms of the cumulative. So it's just that that one has reduced, this one has increased, and it just takes the number up. It doesn't bother on how profitable a business is. This market analysis is just talking about you're being conscious of how many customers you are targeting, and if you have the capacity to target them, or you should bring it down a bit. So if you bring it down a bit, your growth rate is faster because you do not have a lot to deal with.
Right. Okay. I get it now. Thank you, ma'am.
Yeah. Ola, what's the question?
Hello, ma'am.
Yes, ma'am.
Hello, ma'am. Can you hear me? I have a question concerning this market analysis.
Yeah.
Concerning this example we're using now. Now, for the diabetic patients, under that's the column for number, that's the 5,000. We're talking of numbers of individual diabetic patients. That's if you're counting them a customer one by one, right?
Yes.
Okay, then also under corporate health conscious professionals, we're talking of individuals one by one, right?
Yes.
Then my question is, manufacturing companies, are we talking of manufacturing companies, are we counting them as companies, or are we counting them as individuals? Because I'm thinking maybe there's supposed to be kind of uniformity in the numbering.
No.
Because if we're counting, are we counting manufacturing companies as a company, or are we counting them as individuals in manufacturing companies? So that's my question, ma'am.
So we are not dealing, we're just taking them as units of a business. So an individual can be a unit of a business. A company can be, so let me give you a very easy example. So DIRA now, we will say that women in DIRA, we can use women, or we can say the businesses in DIRA. It will be the same thing.
Okay. Okay.
Do you get that? Yeah.
Yes, ma'am.
So
yes,
the women,
yes, ma'am.
if you say number of women in DIRA is 50, and you say the number of businesses in DIRA is 50, you are saying the same thing.
Okay. Okay.
But in this one, it is businesses that is being targeted. And those businesses are having, maybe you are targeting the businesses, not individual. The strategy for marketing them is different. So when she's going to market diabetic patients, she will probably go to hospitals or friends and family, or talk to all of us. Do you know anybody that is diabetic? If she's looking for manufacturing companies that will buy the product, the same product she's selling to diabetic people. She will be looking for the head of the business units in that company or looking for the CEO.
Okay, not the individuals in that company as per the, maybe counting them as individuals. Okay, okay.
If she counts it as individuals, then we'll use another model.
It's okay, it's okay. Thank you very much, ma.
Any other question? Because I'm moving straight to the very next one, sales forecast. Okay. Thank you. Thank you. So if you have any questions, just drop in the comments. All right. So this is projection for, so I will go pick your, you should edit from here, right? So just a minute. I need to pick. Okay, so I'll go now. I'm still talking to you. So these are our clients, right? I'll just speak and come to forecast. Okay, so you see what I did now. I just updated on the anything blue can be edited. The ones that are in black cannot be edited. My system is hanging. So let's go, man. Still on the diabetics patients. So we are targeting how many every month? Based on these projections in this your market, 5,000 in a year. So how many is that in a month? How many of these patients would you target in a month?
That's
5,000 divided by 12.
That's 5,000 divided by 12.
416, or let's say 420.
460.
Thank you, ma. 420. So you go 420. The manufacturing is 10 in 1 year, right? So maybe 1 per month.
1 per month.
Yeah. So you see how it is going. It's just so the other one. How many are we targeting for corporates? The 10,000. So let's say 10,000 people, so that you give gap for when it's not going to be exactly 10,000. So remember that the market is also sort of an assumption, so you can walk around it to see exactly how many you should actually target and you can target. The most important thing is that you understand your figures. Don't try to outdo anybody. The business will grow on its own. So even if it is very small, you're going to do, but just that consistency. So I'll just take all this for the next 12 months, all the way to December, and feel. Where is my feeling? Okay, so that's working. Okay. All right. So I have taken it. So we are back to our figures. So this is what we run with. So now to be very careful, we cannot. Let's do. So at what point do this you need to work around? So unit sale per month, ma, is, so when I'm done, I'll send you this because this is for you. So this unit sales, is it, do we want to do, so at the end of 1 year, you can see that you are going to have 5,040 customers that are diabetic patients, 12 companies, and 120,000 corporate health conscious professionals. Is that okay?
Yeah, it seems.
Or the figure is not looking like what you are looking for right now. You want to, it's too much. You are like, no, I cannot meet up with this thing. So you are targeting 125,052 customers.
It's doable.
Sorry?
I said it's doable.
It's doable. Good. This is in 1 year, by the way. So 1 year. So here, I think I made a mistake here. So the growth rate is 540-15. So let me work that out here. Don't bother about some things I'm doing here. 40. Yeah, so this is my Excel. I'm just now working on it to clean it up. So I've used that to compute the second year already. So just in case we're having something different. So this is what it looks like. So let's go to how much does each patient pay?
Okay, so an average for the diabetic patients, say an average of 4,000 naira.
4,000.
A minimum.
So how much do you charge manufacturing companies? One person, one company, what would their charge looks like, unit price?
Okay, so for...
You need to now answer the question the other lady was trying to ask. Are you dealing with a manufacturing company as institution, as an entity, or you are marketing the clients inside the company?
No, I'm dealing with them as an institution.
Okay, so what is the unit pricing for institutions?
So on the minimum, like a million.
It can't be like a million. You sell to manufacturing companies. How much do you sell per unit of your item?
Okay, per unit.
Yes, unit price.
Unit price is 30,000 naira.
30,000 naira. How many do you expect a company to buy from you?
100 of that.
100 of that. 100 of that is how much? So when you are doing this, you are going to put a note. 100 units. Please let me have lights. 100 units per.
So that would be like 3 million.
Okay. So I put a note here. Let me. Okay, so that is not showing me. I wanted to merge it, so that's not showing. So that's how much now? 3 million.
Yes.
So we put in 3 million here. I've put a note here for you to know that it is 400 per 100 units per company. So that answers to that question the beautiful lady was asking. So are you treating them as per unit? So each company is taking 100 pieces. So that has to be clear in this analytics. Okay, so for what do they call it? For the businesses, corporate health conscious prof, how much do you want to charge each person?
Average of 3,000.
3,000. Oh no.
An average of 3,000.
So everyone here, you will do this for your business. You will decide the name of each unit of business that you can increase this. So you click and insert if you have more than 3 items. So your own could be spa, women spa, nail polish, hair and wigs. 1, 2, 3, 4. And each item that you are selling, how much does it cost? How much, sorry, not the cost. What is the unit price? Everyone has to do this. So then you go to, so you see that it has updated all the way to December for year 1. So ignore this.
Hello, ma.
Hello.
Ma, this is Olayemi.
Yes, ma, please go.
Please, I want to ask a question.
Yes.
You know our market, these are the people that we are targeting.
Yes.
Now for the sales forecast, so are we targeting, I mean, are the items, which is the products, are the people that we are targeting or our products?
Good question. So your products, how many, what is the unit price? If the forecast up here is to tell us who. So this could be children, if you run a school, this could be children in primary 1, because the amounts those people in primary 1 pay is probably different from those in primary 3. If it's the same, you say number of students, this amount, that. So for this particular example, she's selling to diabetic patients. Manufacturing companies are corporate health conscious people. Diabetic patients are individuals, so it's assumed that she wants to sell to 420 people per month. The manufacturing companies, she's picking them as institutions, unit by unit. So one company, but under that one company, I am selling 100 units of this my products. So this is where we put down that's where I put this analysis. So I added 100 units per company. So she can as well say 100 in the, so look at it. What she can then do is, to answer your question, instead of calling them manufacturing companies, we can actually put 100 here. If we want to state the model in a different way, and put 3,000 naira here. We will still arrive at the same thing. Because rather than multiplying 3,000 with 1, 3 million with 1, when we multiply 3,000 with 100, it's still the same 3 million.
Okay, so we can play around.
How you state it, yes. It's just that you will arrive at the same figure. Now, if I'm doing this at my advisory, I will tell you so that you don't have to do these notes every time. Manufacturing companies use 100 instead. But if it helps you to say 1, it's better. The framework doesn't matter. So far, we arrive at the same figure. Is that clear?
No, it's not clear for me, ma. Sorry, please, I'm confused. No.
So let me help you. You make pancakes, right?
Yes, ma.
Good. Right. So your own is pancakes. How many pancakes do you want to sell in 1 month? How many?
Like 300.
Good. You just put 300 here, that's all. How much do you want to pay for? Do you want people to pay for each of the pancake?
Actually, I sell to stores. So they're the ones that buy from stores mostly.
So whatever it is, so it's the same question. Whether it's store, is human beings that are paying 1 unit of the pancake.
Yes, ma'am.
So how much do you sell one? Even if it is dozen by dozen, there's a retail price. How much
Yes, ma'am.
is retail price for one that you will be paid for by your supermarkets?
It's like 2,900.
So you put 2,900 there, that's it. Instead of the 4,000, it will multiply itself all the way.
Okay.
So it's the same concept.
Hello, ma.
Okay,
yeah,
ma.
yeah. Ask the question. Yeah.
My target markets are natural health practitioners, mothers, women age 25 to 55, and so on. Now, if I'm now at my sales forecast, I produced using herbs and spice to produce organic cooking seasonings, herbal teas, and food supplements. Those are the things I will put at my sales forecast. That means my sales forecast will be different from my market list.
No. Your market is your
customer,
defining who this customer is. From your business model, who are your 3 main customers that are going to pay? That's why the business model was done.
They are
the customers that are paying.
Okay. They are the natural parts, the health conscious people, and women.
Okay, so women are mainly health conscious. How many women are you targeting every month?
For like 500.
Sorry?
500 women.
Okay, can you hear me now? Okay, so I've gone back to the potential, the markets. The market's potential customers are still the same that we are now deriving the costs and the unit price from. It's the same thing. So I'm back to this market again. So in your own case, they are women who do what? Who have been paying for or who will pay for your service or business or product?
Women who decide in the house the food that people will, because we are targeting people that will make use of our seasoning. So and the women who decide in the house what they will eat or not.
Let's say you are targeting women, right? How many women are you targeting?
500 in a month.
So this place will be 500. Did you see what I'm doing?
Yes, ma'am.
So your CAG will now go, if you want to grow 500,000 people in a sense every year.
No, we work towards like at the end of the year we should be able to cover 21,500. Is increasing every month. At the end of the year, we should be able to target 21,500 women.
21,500 women at the end of the year?
Yes.
No, but you said 500,000 from month 1.
For the first month. For the first month.
For the first month.
Now make it, yes.
So you want to now target how many more women every year?
Increase it.
How many women every year?
So the growth can go like that means 40% rate.
Every year or every month?
Every month.
So if I'm going to do that, I will first bring my 500 out.
Times 40.
Yes, I'll first bring my 500,000 out. I hope this is a realistic figure for you. I don't think so. 500,000 women in your first year. You want to grow them by how many women?
40% every month.
40% every month. So 500 in the first year, want to grow 40% every month. Please, can you grow 40? Please, somebody help me.
That's 200.
So that's 200.
200
every month.
Plus 500 the second.
So let me just run this. Let me do the math. Where's my percentage sign? Are you sure? Because at the end of the day, you are getting up to 1 million in 1 year.
No, that would be, the first year will be first month will be 500. The second year will be, second month will be 700. Like the 40% is 200 in every month.
Multiplied by this. That's 200,000, right?
I'm not saying 500,000 people. I said 500 because we just a new market. 500 women, not 500,000 women.
500 women.
Women.
Oh, okay.
500.
That's
not realistic.
You are starting with 500 women, not 500,000
women. No,
okay?
500 women.
500 women. That's why I'm doing this math.
Women.
How very unsustainable that could be. Okay, so I don't need.
Yes.
No, so that would be nice. Okay, that's fine. So that we are still okay.
Okay. All right. Now I understand, ma.
Yes. Okay. So you are clear now. So your 500, you grow it. Please grow 500 by 40% cumulatively in 1 year. Every month. Please, you can just use your ChatGPT to ask that question. I'm doing that now. So just say, ChatGPT, what is the total number? Oh, my system is very slow. What is the total number of women I'll get if I grow 500 women at 40% in 12 months? GPT, tell us what the answer is. So it's doing my compound interest for me. So we will have approximately 28,337 women after 1 year. So that's the figure we're looking for.
Yeah, within that range, ma.
Sorry?
The range we are targeting at 21,000. So that means 1,000 in a year. So that means our rate is a bit high.
What do you mean by your rate is a bit high?
At the end of the year, we are targeting 21,000 women. And for 40%, you have almost 28,000 people. So I think we are still within the range. If we can.
I'll run the figure for you and you can decide whether it works. So when you grow 500 women at 40% every month for 12 months, you get a total of 28,342 women cumulatively. So the next question you will ask yourself, and I'm asking you, is how much do you want to grow that number from then year 1 to year 2 to year 5? That you have to answer that question as well. So what will be the growth rate? You can't grow at 40%. That's not realistic.
I'm saying 15 or 10.
Let's do 10 because we already can see 5 here. 5 year gives you 34,456 women in year 5.
5.
If you do at 10, that's 41,503 women. We have the capacity to manage that. So, is it clear how we are getting this part?
Yes, ma'am.
Okay, so
very clear.
I hope everyone is feeling their own. I'm feeling, so everything in blue you can edit, please. So include your number. If you need more sheets, just click on that and click insert. And you can insert more sheets. Or more rows, sorry. More rows. You don't add any sheets to this model, please. Don't add any sheets. All on it already. More rows for this particular one, you can do more rows. So let's go back to our sales forecast. So we're back to our diabetic patients. So is this what it is? Are we using 1 or 100? 1 or 100? We're already here, so maybe we use.
Okay, it's not me.
I'm leaving you alone so that in case you are not here. This is supposed to be 3 million before I miss the calculation. Okay, so we're back. So are we clear how we're getting the total sales and the dynamics around working all of this out? So when somebody is doing it for you, or you got somebody to do it for you, or you get to do it here, you actually know exactly what you're looking for in terms of your business. Okay, so oops, did I close my Excel? It's gone again. Oh no, so my Excel closed up, like seriously. So just a moment, let me call it back. Yeah, but can you see my Excel? Where is it? I can't find it. So I'm looking for my screen, I can't find it. Still showing, okay. I think I lost it, so stop sharing and go out. It's not coming up. Just a moment, please. So I expect with many people here.
Yes, I can hear you.
Oh,
the
yeah,
next.
so yes, it's hanging the Excel.
It's been crazy.
And we have Yeah, so I will have to go out and come back again. Please just give me some 1 or 2 minutes. Sorry, ladies, I'm back. Hello, can everybody hear me?
Okay,
Yes,
ma'am.
ma'am.
Yes, ma'am.
Yes, so sorry. I think my internet is just acting up. Okay, so can you all see my screen now? Can you see my screen?
Yes, ma'am.
Yes, ma.
Yes, ma.
So we're back to the, so we are clear about how to calculate your units and make sure that you are actually computing the right things. Now, the next thing you need to check, you want to compute is the sales. So you see that it has computed 420 times the unit price. So it gives you 1.68 million. So this is the total sales you make every month, 36.64 million, all the way to the end of the year. Is it clear? Is it clear?
Hello, ma.
Yeah, hello.
The unit price for the manufacturing companies is a little bit high, 3 million naira.
Yeah, for one company, they are doing 100. There's a note here. It's 100 units they are buying. The company is buying
Okay.
is buying 100 units. So that was my explanation. You can state that the manufacturing company are buying 100 units at 3,000 naira, or you lump them as one unit of 100 pieces at 3 million naira. You are saying the same thing. So did you get it?
Yes, ma'am.
Right. So you now go to sales. It computes on its own. So the ones in blue is the ones you can change. So tell me, ma, how much does it cost you to provide a unit price of your, what percentage of that 4,000 naira is actually the cost of producing that 4,000 naira? What does it cost you to produce one unit of a product? Simple question.
1,600 there.
Okay, that would be around 60%.
Ma?
I said that should be around 60%. Okay, no.
No, it's less than that.
40. 1,600 gives you 40%, right?
Yes.
Is that correct?
Yes, ma'am.
Okay. So all you do here is put the percentage of what it costs you. And it's the same across board, nothing changes. We have it. So for every 3 million naira you earn, it costs you 1.2 million to earn the 3 million. Every 4,000 naira you earn, it costs you 1,200 naira to earn the 3,000 naira. Right?
Yes, ma'am.
That's it. Your sales forecast has been done. Once you get that first one, and you ensure that it aligns, we've done it for 12 months on this particular Excel. And it takes into 2024. And this is what your financial is looking like. If you grow at the rate you want to grow, this is your 5-year financial.
Oh, wow.
So everything here is almost, there's nothing to change really. So in year 5, you'll be making total sales of 1.273 billion naira. And it will cost you 508 something million to make that sales. That's it. That's what this whole Excel sheet has calculated in splits of seconds.
Oh, wow.
Yeah. So if they say, do you have projections for 5 years? You say, yes, I do.
Yes, I do.
So it's a doing accelerator. It's not English. Go and do it at all. You won't be able to do this. You would have gotten tired or something else to pick your interest. So this place is very easy. Designer 1, designer 2, designer 3, your marketing. So everybody fill in as many people, driver, personnel. Leave this part under, just use these ones that are blue and write the pricing out. So, so let's start. You have a production personnel, right?
Yes, ma'am.
What are the names of your units of production? Who are the people you pay salary every month? That's all this is. This is personnel.
Okay, so I'll just put like, okay, 3 production staff.
So take home, you go and fill up as much as you can. Anywhere that is sort of confusing, leave it. But you can fill in anywhere that is blue, but not black.
Okay, ma'am. Then I want to ask, do we fill in, because it's a projection, outside the current staff? Let's say we're anticipating to recruit some more people as we grow. How will that be reflected?
Yeah, so let me tell you how it's reflecting here. So you're starting with January 1st, the first month, there are people that were there before February, March, April. I mean, you are in March. If you are going to stay with the current team till May, June, when you come to June and the new people are resumed, you will add them to June. So June will change. Where will we know will be these total people, number 48. So number 48, total people for January could be 4. In the February is 4, but in June, so this is equals to, because we are assuming is 4, so you can edit it. That's why it's still in blue. They are now 10. You will see that from January to June to May, it's 4. From June, it picks it as 10 all the way. If you come to another month and you want to increase it, just increase it. Maybe September, they are now 13. It will pick 13 from that September and keep going again with 13 people. The amounts will be changing. Did you get it?
Yes, ma'am.
Okay. It's a very simple slide, so just follow. Ensure that whatever you are editing is the one in blue. Just leave anything in black out of it. Everything in blue, yes, you can change. You can add, you can subtract. So that's it. So you can change all of this designer 1, make a sample machine, and just use this for a real company, by the way. Is one of the companies we did their business plan. So these are real life figures of a company. So you see that it changes. So we'll go to the next one, which is
Sorry, hello, ma. Sorry, ma. Please, can I ask a question before we move on? I raised my hand actually, but I was not on.
Yes, please, you can go on.
Okay, please, I just want to find out, how do you calculate unit cost of production for a product that you sell but you don't actually produce directly? How do you arrive at the unit?
That you don't produce directly.
Yeah, but you sell.
You will not be calculating the production cost. That is not your business model. Your business model is saying that you are selling, all right?
Finished product, yes.
So what you put in your market is the people you are selling to and how much of that product you are selling, not the production cost. So that means you don't have production costs. You clean up all these things and it's zero. You go to your sales because you don't have business with production cost.
Not for every item, for maybe a particular item or two items. Another one you are producing yourself, others you are not producing yourself.
It's the same thing. So the ones that you are producing, put production on that production. All these things are allowed to be zero.
Okay. Thank you.
Yeah. Then we go to the P&L, profit and loss account. If you do everything right from the first 2 pages, this should be easy. Again, this slide has made it less complicated for everybody. It's the same January, February, the same thing again. If you do your direct cost and your payroll very well, you see that it's in black. You don't have to touch anything. Please don't touch anything here. The only thing you can touch is other cost of sales, any other cost that you want to add, that you add. Please don't add generator here. There's somewhere down there that's general expenses. But if generator is direct cost, please include it under the cost, what it costs you to produce. So generator cost would have entered that cost. Then you come to operational costs, sales and marketing, how much you will pay. Please don't touch the sales and marketing payroll. It is black. It is updating on its own. So you will see the question we were all asking, what's my profit margin? What does profit margin? This business now, if you put your, if you put your own actual payroll, it will compute your profit margin straight away up to your gross margin, all the way into your into the 5 years. It computes all the way into 5 years. So you see, we are still going on the same trajectory all the way into 5 years. So general expenses, you come back to, make sure you are starting your Excel spread from where it starts from, please. Every time, start your Excel sheet from where it starts from, A, not AB. A. It has to start from A, then B, fill up. Please, payroll taxes, leave it at 15% for now. That's payee. So don't leave it at 15%. We will decide what is the standard that we should put there. Some of us don't pay, so we have to take it to zero. But we like to account for it just to see the health of your business. At the end, this pro forma will tell you what percentage of your total sales and marketing is on your gross, on your sales. General administration, so everything blue. But when it comes to total operating expense, you always leave it blank. You see, black is computing on its own. Consultants, if you are paying DealWoman, for example, or DIRA, or you have consultant you are paying, you can put other expenses. You can add to other expenses if you want. Then general expense, market promotion. Please, if you have not started marking some funds for all of this, please assume them and put it there. When we are talking to you one-on-one, and I mean those that have submitted their business model, BMC, that are now here. So if you are here, you have not done your BMC, please just join Cohort 2. So we are working with the 21, I think 22, 23 people that dropped their BMC. Once you have sent your BMC and I have commented on it, then you are free to work on this. If not, please join Cohort 2. So based on your BMC and the things you will be praying for, you know that there's the operational cost elements that you've already highlighted. So this is the time to now put money, to put figures, naira and kobo to it. Everything that is blue, you update. So there's so that's it. Is there any questions here? This is pretty much simple. It calculates itself. You can even just update what we have here. You don't need to stress yourself. Marketing and promotion. Please leave the depreciation out of it. If you don't know, don't leave the depreciation aspect of it. At that, we will assume something. Utilities, insurance. If you don't know, just leave what is there. Other general, you can put miscellaneous under it. So just add your own numbers as much as it aligns. So add any other expense you want to add. When we review individually, we'll know if you need to add one or two more. Yeah, Aisha Naturals, your hands are up. Go ahead.
Well done, ma'am. So I want to ask that should we, I mean, which one will be more preferable, or which one will align with the program? Because I actually have a financial projection that was prepared based on my last year financials. So I don't know if I can submit that one, or I should just sit with this and do it from scratch.
Sit with this. If you have what is right at the end of the day, we'll compare. It will ultimately become the same thing. But we need to be sure there is no error in what you've done, and we do not have the time to review that. So sit with it. Let's see what your projections are.
All right.
So there is a place I'll jump to for, because you asked this question. Hello, ma'am. You see?
Yes, ma'am, we do.
Yeah, this past, fill it up with what is on your financials. Everybody, please, if you have audited financials, go to this one called past performance. It's just past on your scrolling for your sheets. Fill it up. Again, fill only the blue. It will automate the entire plan. So these are audited reports. So you have your financials for 2021, 22, 23. Please put it there. Ignore 2019, 2020, 2021. Yours will be 2021, 22, 23. If you have 2021, 2023 alone, just do 2021, the last bucket. If you have 2022, put 2022 in the middle. If you have 2020, so it will be 2020, 2021, 22, 23 for these 3 years, so that we can project 3 to 5 years. So we can only take 3 years past performance for this particular Excel. So please just fill it, your past 3 years, fill it here for past. That's why that past is there. If you don't have, please ignore. If you don't have and you are a startup, fill up startup. Just fill this startup legal. That just fill these basic things here. Cash required at the best of your knowledge. When the Excel spreadsheets, it will update itself. What is most common is the P&L, the sales, the markets. Every other thing is just based on what is required. So I'm going back to my P&L. Everybody has to fill this. So if you don't have past performance, don't bother, leave that portion of past. Don't do it. But if you have past, go to your past audited reports, pick the figures and put it inside of that particular sheet. So I've treated startups now because we need to go. And the other things will be cash flow, which is important. So this is cash flow analysis. A lot of it we compute on its own. A lot of it, if you don't understand, leave it as it is. It will update based on the figures that you have put into the other figures. So when we come, we will update it for you when we're looking at individual financials. So there's so many things here you don't need to do that it just compute on its own. So here we will ask a bit of questions and you just impute it. The end thing is that if your cash balance is bad, you will be finding red under this place called cash flow. If it's red, then your company is in danger. But if it's these ones are red because we didn't compute for the middle of the year, so it seems significant. This is year 2. So this is the year 3, year 2, 3, 4, 5. It has to be black. If it's red, it will say false, and that means your cash flow is terrible. So we want to know whose cash flow is okay and going from this place, and whose cash flow is terrible. And so we'll know what to do. Every other thing we will treat, that will now be investment details. I think we've taken the P&L and the cash flow. The receivables detail, and then there's the balance sheet. So don't worry, most of balance sheet again is black. It will compute on its own. Balance sheet is just to balance. There's hardly anything you are going to impute here. You notice that everything has to be black. If there's any adjustments, we'll look at it. And then, like I promised all of us, there's investment analysis on how your money, if you are taking investments, if you are paying dividends, and this entire place is for us to compute the company valuation based on 3 bases of valuation that I talked about: earnings-based valuation, sales-based valuation, and the earnings. This one is calculating earning-based and sales-based. The market valuation is another model. It's not part of this particular session. If you are working on valuation, then we can do all of that. That's comparing markets to markets. So when you are done, we'll be able to say what's the value of this business when you say based on the earnings-based valuation and sales valuation. So when you are talking to investors, you are able to tell them how much my business is worth. And you can, this you see is black, black, black. The only variable is the multiples we use. I will not bother you with this multiple. When we are doing it for each of the companies that qualify, we will only do this for those that are able to do their P&L, cash flow, and the markets. And then we'll get to this point, and then we'll be able to move on to week 3 because we are then ready to write our pitch deck. All the financials your pitch deck will need is inside of here. Everything that it will need. The use of funds is computed. How you pay back if you take a loan is computed on this Excel spread all the way. So this is a very comprehensive Excel. The investment offering, all the jargon, if you are doing equity, the valuation, investment, and the shares, all of it. If you want to sell shares, I'll let you know how they will not buy your business. And you are afraid that investors are coming, they'll take over my business. I'll tell you what, this slide alone tells you what investors get. This particular company was trying to raise 5 billion naira. The equity share that was given out at 50 million was 10%. At 200 million was 10%. At the end of the day, investor 1 has 1 million shares. 1 million shares, the owner of the investment, the investor that shows up next for the 50 million gets 667 shares. So nobody is taking anybody's business. It is clear. If you don't compute it like that, that's when there's trouble. So founders' equity is still 75. Option holders, which could be staff or any other person, you see is in black. The business is computing it all by itself. We promise you that we help you do it. So this is what we're doing, no stories. So if you, I'm trying to ensure that in the next 1 minute, we are able to say bye to ourselves for today. And then the benchmarks, and then it computes a whole lot of ratios. So it computes a whole lot of ratios that you will need. So there's nothing they're asking you that what is your debt to equity ratio. Don't worry, we know what your debt to equity ratio is. Straight away, you see it's black. There's nothing you are adding, is updating on its own. A bit of adjustments in all of the other percentage. Most of it are thoroughly done. So ladies and gentle ladies, here you go with your Excel, please update as much as you can. You have questions, and let me know. Thank you.
Good afternoon, ma'am.
Thank you, ma'am.
Good afternoon. Sounded like, thank God she's done.
Wait on, ma'am. Hey, ma, this is serious, so.
It's serious. Let me go off sharing so that.
And this one is a big matter.
Yeah, it is a big matter.
In fact, it's a serious matter. And the truth is, as much as I know that I understand at least a very large extent what you've discussed, I want to be sure that I'm still doing it right when I'm like practicing on my laptop, because our light went off, so my battery is dead now. So I want to ask if we can have the recording of this session, ma, just today's one, if possible, ma, please.
Yeah, if we can download. Marianne is back, thankfully. We thank God she's back. So it's the downloads. If we can download, I think there are some of the links that are available now, so you should get it.
Okay, ma'am. Yeah. I'm expecting. Thank you so much, ma'am.
All right, Princess, you have the.
Good afternoon.
Good afternoon, ma.
Yeah, so I also want to ask about what you just asked, the recording, because I was pretty much lost at some point. I also wanted to find out, are you sharing the Excel sheet with us?
I've shared the Excel sheet since yesterday.
Oh, you did?
Yeah, check the WhatsApp group. The Excel is on the WhatsApp group. I dropped it last night. If you didn't see it, that means you're not following us. Please, how many people didn't see the Excel
well
sheet?
received. I have mine. I've edited already. I'm happy.
Yeah, so
Hello, ma'am.
Yeah, go ahead.
Okay, please, ma'am. I will update this. I will edit the Excel sheets as you have instructed as much as I can.
Yes.
I hope there will be corrections and feedback from you, because mine, number one, is a service business. 2 is just starting up, so I don't even have all these figures. So everything is just going to
you have to project it, project it.
All right.
By the time we started the deal room, we already done projections. You'll come back to adjust it, but have an idea of what you are working towards.
All right, so thank you, ma'am.
Attendance.
Suggest something, ma'am.
Yeah, so attendance has been dropped. Please, Faith, drop it again.
Can I suggest something, ma'am?
Please do.
Okay, for the sessions, especially because of the recordings, and for those of us that need the recordings to go over.
Yeah.
I've known Google Meet to be much easier and seamless. Maybe you can try it. once you end the meeting, Google Meet will send the recording straight to your email. You are not bothering yourself about how to upload, how to download or anything. Google does that for you already. So you just have it in your email automatically.
We are already on a paid Zoom, so we don't even for
right.
We're already on a paid Zoom for as long as possible. So we
Right,
maybe we'll think about that later. We'll try, we'll see if that's possible, but we're ready. So Google Meet, we're trying to even work with Microsoft to get Teams ready. So it's difficult for so many of us on those axes. So. But you should get it very soon. Okay, somebody is saying it prefers Zoom mostly. Thank you. Okay, so we'll take that feedback. All right, any more questions so that we can call it a day? We need to pick our kids in school and we need to make dinner. Right, Princess, is your hand up? Princess Joy, your hand is up. Okay. All right, thank you, ladies. If you have any questions,
Ma, please, I dropped a question in the comments box, please. I dropped a question.
No, ask your questions. So ask your questions direct. For the sake of this program, we prefer you ask your questions directly.
Okay, Ma, please. I was asking for schools. In marketing and sales, we are writing according to classes and not as in pupils according to classes and not the books, school uniforms, and other things we sell, right?
I have said that when you are running a school, do not use books and uniform as a revenue generation model. It's a very tricky one. Use school fees for school. Any other thing you do with school will be other income, but your main income will not be uniform and all of that. It's going to be very minute because children don't buy uniform, they buy in 1 year. Your return is going to be very small. So you have to think out of the box to make money. So for schools, I always insist when we're working the program, please attendance, Faith, can you please drop the attendance again of Marianne, please?
Okay, thank you, ma'am.
Yeah, I hope you understand. I would like to see what you're doing with your school. Uniform, books, no, it's not a good item to pick. School business is actually not for profits. So you have to look for sustainability models where you could get grants or look at other ways of making money as against taxing on uniform and books. It will be the ideal model to run your business model as a school. Right. I know that is a difficult conversation, so we can have it. We've worked with a lot of schools and they are doing very well. So we have to realign your business model. School is actually social enterprise, even though it's income generating. All right. I suspect anybody dropping any questions? Attendance dropped. Attendance has been dropped, please. Again, this model is if we are able to do your P&L, your cash flow, and your market, and then we can run your financials with you to the end, then you move on to week 3. I hope it's not, what's the percentage? We are 60, and then I think it is 30% that we have for week 2 from the 100% that started in week 1. So we go into week 3. We hope that will come. That's just 5 or 10 people. All right. But thank you so much, everyone. Thank you, ladies. Thank you for your time. Thank you for staying through with this. We'll talk on Friday. Please, you can reach out directly. The office hour is still open. Go and check my slots. You can see, pick a date, pick a time, and then I can attend to you. Please, if you pick a date on the office hour, please draw our attention on the so that somebody will follow up with me. Please. Thank you and have
Thanks very much, ma'am.
Yeah, bye, ma'am.
Bye, ma'am.
Bye.
Okay, bye, ma. Bye, ma. Bye.